Hey everybody, hey traders, Chris over here. Welcome back to a video in my playlist, Traders Path to 100%. This is episode 5. Let's take a look at the accounts, see where things are at. We'll talk Forex, we'll talk stocks, options, talk about the holiday season. It's November 30th when I'm doing this video. We're just wrapping up the month. We had a pretty big push on the Dow Jones today. So it looks like I just posted this on my Discord channel. We had the QQQ or the NASDAQ breach the 2023 highs. We had the Dow breach them today. We still have the SPY and the IWM not quite at the new highs for the year. So we're going to take a look at that, see what that means. The big news coming up, we have December 8th non-farm payroll in the U.S. We have CPI in the FOMC on December 13th. That's probably the remaining catalyst for volatility this year. I am by no means winding down my trading, but I looked at my portfolio A to Z today in my trading room, and I've actually got a lot of optimism going forward on some of my positions that I've built over the last 6 to 12 months, and we'll talk about those as well. So let's get into it. We know there's risk in trading, you know the deal there. I'm going to jump into Forex first. This is my portfolio builder account where I started at 10K. Right now it's up to $10,086. I'm still in a bit of a drawdown, still waiting for technicals to play out. If I just do a quick glance at these currency pairs, so here's Aussie Swiss. Aussie Swiss in the bigger picture, this is what I'm looking for. To me, this is setting up for potentially a very large falling wedge, something like that. And it might take some more time, but if and when this thing is ready to rip, I would love to see that type of trade to the upside, take this thing back to 61 or 6200. You can see here my break even is 5800. So even if I'm, keeping the same position size and I get 400 pips of profit, you can see that's going to be a big swing in P&L. If I go to the CAD Swiss, this one is literally sitting at 30-year lows. This week thus far, we've had a nice little pop on oil, and you can see that the weekly candle thus far is leaving a long wick to the south. So I've said this to traders in my trading rooms. If the CAD Swiss is going to give us a bullish pattern, there's another position I'm looking to add. You can see these pending orders right here. What I'm going to look for is this high getting taken out. So if we get a rally on the CAD Swiss back up to this high and a pullback, I'd like to add on a swing, add on pushes, and plan on this thing heading back up to these range highs at 68, 68.50. If it goes higher than that, I have a big pocket at 71.50 that I'm looking to hold on to. My break even is 6,600. So if I add no additional positions, getting up to around, that'd be 550 pips in net profit, and not adding, again, big swing in profit and loss. But I will be adding to these positions. That's the whole point of this account. That's my ability to, get these big injections of profit. When the technicals line up, I will start to add. These are all buy stop levels, and I will continue to look to, grease the wheels a little bit if this is going up towards 68, 68.50. Try to take some non-FIFO trades with unique trade sizes and units. And we talk about it a lot in the flex room as far as knowing, how to trade and how to manage. Also, one thing that would be helpful, check out in my video series, the Trading 101, Keep It Seriously Simple, adding to winning positions. That would be one of these situations where I spot the pattern, I trade the pattern, and I ride those wins for a nice injection of profit. And that's what I'm looking to do on a lot of these pairs. Euro Swiss has pulled back pretty violently the last couple of days. It's going to be interesting to see how this one plays out. What I am noticing here on the daily time frame is look at this long wick to the south and then finishing up here. I do wonder if we have some traders that are coming back in to fill this pocket, if this is going to be some type of head and shoulders pattern, left shoulder, head to neckline, right shoulder. If we get above these highs, you can see I have pending orders up here to get that trade. This is also working with a potential double bottom on the daily or the weekly time frame. You can see these lows back in late 2022. If we're holding these same levels, this would be a beautiful pattern right over here. So a head and shoulders pattern off of a double bottom support. What better spot to take this up towards than 1.00, 1.00, 1.01? And if this is truly a double bottom, then we're going to go all the way up here towards 105 or 106. So again, if I'm right, I'll be looking to add positions. I'll stack these orders up, and I've got a long ways to go for my profit levels as far as closing out the whole group trade. Pound Swiss, still pretty sideways. I have 2 positions in on the Pound Swiss. I've got some buy stops above on a breakout, and I have some positions down here. I'm going to level myself in case we have a retest of this flash crash low from late 2022. So just kind of surrounding the pound crosses, or the pound Swiss rather. New Zealand CAD. This one I actually like quite a bit. I've added in. I'm in my 3rd position, I believe, on the New Zealand CAD. Actually, I might have 4 positions. Let me double check something really quickly. Let me check my spreadsheet for New Zealand CAD right here. Filled. So I have 5 total orders, 2 pending, 3 filled. So I'm in 3 orders right now. on that position, but my goal is to continue to add. We get pullbacks looking to add, pullbacks looking to add, trying to take it back up to these highs around 8,800. I do have a profit level set around 8,750. To me, that's kind of good enough, but I'm looking for that to stay bullish. That's New Zealand CAD, New Zealand Swiss, similar to the Aussie Swiss, and just waiting for some confirmation to see if I can start adding more. I don't have any additional buy levels at this time. If I go to the daily time frame, we're getting closer. We're definitely getting closer. I could see something like this. If this is kind of an awkward looking pattern, I might just take an order here at 55, do like a 5,500, 5,550, and a 56, and add in some buy stops. If we have another pullback to equal lows, I might throw in an order here, or equal lows, throw in an order here, and just kind of keep this one surrounded with some small trade sizes. So we'll talk about this one more next week as far as my portfolio builder class, but that's how I'm looking to position on that one. And then dollar Swiss. The dollar has been pulling back. I think that the easier trade on this one is just wait. I've leveled into the 382 and the 618. If this is a crown pattern or reversal pattern, I'm looking to see if this trend line breaks, and then I'll start adding some more positions. So right now I'm just sitting with a pending order here, also lower, pending buy stop levels if we break the trend line, but that would be confirmation right there. Otherwise, I'll just sit and chill. It's the 786 pullback, which means this would be my symmetry window if we get up to around 94. If we get to 94, pull back again, push up to this pocket. This is where I'm ultimately looking to take profit on the dollar Swiss, somewhere between 96 and 98. So it's going to take some time, but I'm getting some positive swap. The drawdown's relatively tight. You know, the worst position I was in was around $9,300. Now it's up to 97. The most I was up was around $10,400. So it's going to be a process. This is, to me, I'm using this Forex account as an investment. My goal is to take 10 grand and try to double it. So that's part of this Trader's Path to 100% on this account. Let's go into one of my stock accounts. We have this one here still sitting. So we've been up a couple $1,000s. I think the last couple videos you can check in episode 1 and 2. This was in the low 40s. We're now sitting up around 45 and change. Have some good gains. Just taking a look, alphabetically. Amazon's up $2,500. I've got CCL, that's Carnival Cruise Lines, up $1,700. I've got Comcast up $1,000. FXI is up $500. I know I have some drawdowns in here as well, but I'm just managing some of those with long puts. I'm lowering my cost basis, selling covered calls, but some of these I'm willing to hang on to. Anything else here? Uranium plays, URA and URNM. I put $1,000 each on those. Under Armour. I actually talked about this one today as far as some profit potential. So Under Armour, or I'm sorry, Amazon first. That's 146. I've got a cover call at 150. My intention is to not get it called away. I'm going to try to get this to, if it breaches 150, I'm going to roll it, and I'm going to give myself more time, try to roll it up to 160, 165, not get it called away. If I get it called away at 190, then I will take this account at 45, and I'll make about 10 grand on that account. So that's obviously a nice chunk and a big injection towards that 100% goal. Amazon could be a big contributor to that. Under Armour, same type of thing. I own the shares just under $7. I've done a lot of options and credit spreads. We did some 7x6s that are in profit. So anyway, Under Armour, if it just gets back to maybe the halfway point around $14, $15, or comes all the way back to range highs at 20, if I turn this, let's say I just go after $10 a share. Well, I've got 400 shares of Under Armour. If I make, let's say, I'll just say $12 a share, $10 a share. Okay, if I make $12 a share, $10 a share at 400, that's $4,000 on that as well. So it adds up. A couple ownership positions add up pretty nicely, lowering the cost basis. Another one I think some good upside would be URA, which is a uranium play. I bought this at $26.95. I'm looking for this thing to hit. My big target one is $41, and my big final target is all the way up here at $55. Another one I'm using for a barometer would be this Sprott uranium. If you go to the physical, or you go to uranium miners, let's see the prices on this one. So we're at $49.41 for the miners, and I think on the physical price, let me go Sprott again. So Sprott here, let's go physical uranium. This one has been ripping to the upside at $25.89. So this one is where I'm expecting URA and URNM to keep following along. I wouldn't even think about getting rid of this stock until we're at least at these same highs at $37 or $38. If you're looking at just simple measurements, if this is a 5-wave move, I'd say wave 1 is here, wave 2 is this pullback, wave 3 is now. If we continue to stretch up higher in wave 3 or we pause and pull back again, I'm still looking for a wave 5. So I think any pullback towards 21 or $20 looks pretty attractive on this instrument. If you can trade it, I know that it may not be available to all traders out there, but I do like this one quite a bit. And just simple ownership. If it trades options, makes my life a little bit easier. I can buy a long put, have some protection on it, and I can also buy calls and do credit spreads and things like that to generate some income and lower my cost basis overall. So a couple of those big plays. I keep talking about this in my trading room as well. Looking forward into 2024. I still want to see if China is going to be a big contributor to any type of global growth. The U.S. was pretty much responsible for all of the global growth this year, and I can prove that really simply with a heat map. Let's go into the heat map and let's look at the annual performance. So let's go S&P 500 for the year-to-date performance. And overall, you see, I mean, there's obviously things sprinkled in green and red, but what's been carrying the stock market this entire year, what's been carrying the market cap weighted ETFs, it's been the Magnificent Seven. It's been the enormous eight. It's been major large cap tech. I mean, look at these gains. Google at 51%, Amazon 74%, Tesla 95%, Nvidia 220, Microsoft 58%, Apple 46%. Look, the broad S&P, the SPY is up about 18, 19% on the year, right? So, obviously, if you're 100% invested, you're looking at like roughly 20% gains on the year. But if you had just all these stocks were just in recovery. I mean, all these were down 40, 50, 60%, sometimes more. I mean, Netflix was down 70 some percent. Meta was down a ton last year, like 60, 70%. Meta's up 171%. So all that happened this year in 2023 is the market recovered. But we're not at all-time highs. We're still technically in a drawdown from the highs back in 2021. So you can still see a lot of green. Year to date, the market's been up. If you take a look at the world, and then we go to year-to-date performance in China, not everything's too great, right? BABA's down. I mean, this is not the greatest picture of it, but let me show you like HSI, the Hang Seng Index, right? So starting out this year, this goes back to January of this year. We pretty much were at a peak on this big rally, and we have been in a compression ever since. So to start the year off, here we are, the very first week of the year, we're up. But since then, the market's down. I mean, the HSI is down about 13 to 14% year to date. So, like I said, all of the global growth has been in the US. Now, does that switch into 2024? Possibly. And if it does, this is one of the instruments that I'm watching. If this is going to fall a little bit lower, then I would love to see a double bottom or a range play. And even that trade right there going from equal lows back up to highs, if that's all I did on HSI or all I did on China stocks over the next year, that's a 49% gain on an index. That's obviously huge. If we go to an individual stock, here's Alibaba, kind of the same situation. Can Alibaba do the same type of thing with the double bottom and hit the same highs? If that is the case, we hit the same low, we hit the same high, and we're talking about an 89 to 90% gain on the upside. If I go to Baidu, same type of thing. If we come back here to these equal lows and we come back to equal highs, and this one might also just break the neckline and be a big bullish head and shoulders as well. But if we come back down to double bottoms and we range trade, there's 98% just to get back to the highs. So obviously what's nice about these patterns is if this is a double bottom and we break this high, then I would just double that move and we have nearly a 200% upside. And if I'm buying this at the lows, I will rip those positions to be more aggressive using a lot of options to kind of lever that alpha. All right, but I want to see some confirmation. Okay, so a little bit what I'm doing in stocks, spot checking here. My other account is started with 30K. I got into a drawdown to around 23,000. Now it's up to 28. I've been adding to positions. I've closed out some profits. So this one again, positions in Amazon, positions Alcoa. If I can close out for $4,000, $5,000, $6,000, it helps. I think this one, my next big milestone will be $40,000. So going from 30 to 40 is a big jump. And I'll keep adding and building, and I'll keep using options, and I'll keep trading. So I had a one-on-one session with a TD Ameritrade specialist this week, and so it looks like I will be taking my Street Smart Edge platform, which I've been using for like 4 years, and I love it. But Schwab is going to discontinue that platform at some point in 2024. So I am doing a migration into Thinkorswim and doing like full-on Thinkorswim. I use the web platform for spot check because it's easy, but I'm going full Thinkorswim application to make sure that I can take my positions, clone to other accounts, and make my trade management way easier. So that kind of covers the spot check in all my accounts with, up some profits here, up profits in my Schwab account, up some profits and recovered some gains on my TD Ameritrade account that was 30K. And like I said, I'm optimistic for some of my positions. It is going to be interesting to see how the market behaves for the remainder of the year. I don't see there being major disruption outside of the short term, maybe disruption or interruption with the Fed on December 13th. One thing I was reading about today with the Fed Watch tool, let me switch this over to the Fed Watch tool. And then I have one question I wanted to answer regarding this. This came up in my Discord channel just literally before I recorded the video. Somebody was asking me about, tracking trades and journaling and kind of the stuff that's not fun but very necessary to do as a trader. And I'll show you what I do. I track all of my trades that I take from Forex, all my trades that I take in stocks and options, and I've got notes all over the place. And I think that's really important. At the end of the day, trading is a very black and white game. It's either you win or you don't, right? And if you win, the goal is to have a decent win percentage. If you lose, okay, take it on the chin and find another trade. If you win, try to make sure that your winners are bigger than your losses. Doesn't always happen, right? Case in point, today on the DIA, I had a strangle this week for the DIA. I closed out for net profit on the week, not by a ton, like 15, 20 cents net profit. And if I just did nothing for the rest of the day, I would have been up like $3 net credit. So, the difference was I didn't wait. I'm traveling tomorrow. I won't be able to manage anything. So I thought, well, it's up. I'll protect it. I was able to take a small loss on the IWM, take a nice win on the DIA, and it was a wash for about 15, 20 cents. While I was in my live session, it was up to about 70, 80 cents. And late in the day, as the rally on the DIA happened to get up to 360, this was my trade. I had a 354 by 347 long strangle. That's worth $6. So, pre-market is down a little bit, but going up to today hitting, 360, that's a $6 call option, and I paid $1.77. So there's your, big upside. You pay $1.77 to walk away with $6. That's a pretty good gain, right? You're up $4.23. Not too shabby. So anyway, it's just a trade. So let me go to the CME really quickly, go into what the market's expecting. Now, I read that the market is anticipating potential rate cuts as early as March. Right now, you can see it's getting closer. So as it stands right now, it's expected to be a pause because this is the same rate we're at right now. That's likely to be a pause in December. But this is certainly creeping up. That 25 basis points cut as soon as March is creeping up. Going into May, I think the market is pretty much sold on the idea that the Fed is going to be cutting at least by May. There's your highest probability for May of next year. This was earlier June, right? A month or two ago, before the November 1st FOMC, the market was expecting a June rate cut. So now it's been pushed back to May, and then you can see that the one in March is creeping up as well. So all this would be pretty interesting to how the Fed kind of settles the narrative, and if they just say nothing. Honestly, the market might go into a full-on rip through the holidays like it's been. It's been really straight up and gaps galore from November 1st to now, and going into December. If there's not really much to disrupt it, I am not looking to fade this stuff. I think there's a lack of volatility. There's a lack of sellers. Even when I see all my big hedge levels to the downside, I'm still not forcing sell trades. I just don't think there's enough volatility going on right now with this part of the year. You have forced buying from pensions. You have forced buying in bonds. You have forced buying in equities with 401ks. I just think that the market's going to continue to drift. Now, I'd like to see some pullbacks and dips to buy, but I'd also just not be surprised if the market just goes. Maybe the SPY breaks those highs for 2023. Maybe that's a milestone for the market to celebrate. Maybe there's enough juice in this, by the way, that if we breach these highs, I'm telling you, don't be super surprised if we breach these highs, that the market just keeps going until we hit all-time highs. And if we hit all-time highs, don't be surprised if the market has enough fuel to fund this move or kind of fuel this move into 500. And why would that be the case? Because we're being led by 10 freaking stocks. So if we have 490 stocks, or we have the globe, let's say China steps up to the plate and causes some global growth, that might be some risk on, right? There is enough to keep this thing going. And I know that'd be something to celebrate. I'd still be cautiously bullish moving forward because we do have some ridiculous moves right here. And for the last, month especially, that has been one of the bigger moves we've seen in a long time. Like very one-sided. You can see on the weekly time frame here, just straight bullish. 1, 2, 3, 4. This is, if we close where we are today, that's going to be 5 straight weeks in a row, getting us back to those highs for the year. And all it was a 382 pullback. So if we head up into the 18127 as an extension, you can see that we're potentially breaching those highs at 480 to 490. 500 is not that far away. So, and I said this, I said if we're going to get some confirmation, I would like to stay bullish. The problem right now with like getting aggressively bullish is it's all about timing. You know, maybe the market is bullish like through the month of November, and then December is a little bit of nothing. Maybe December is a little bit more interruptive because we have the Fed in the middle of the month, and then the market just rips into late December into early January. You know, I mean, timing is everything, especially when you're coming into your trades with options and expirations. You have to factor all that stuff in. But if you're just a buy and hold, I think right now the path of least resistance is certainly to the upside. Okay, so to end today's video, I want to talk about some notes. Okay, I track all of my trades, right? I've done this for years now. This is a trading room that I run, my Flex trading room. I've got 2019, 2020, 2021. You can't really see the tabs, but I will click on them. Let me see if I can make this a little bit bigger. I'll slide this down a little bit. There we go. So 2019 trade log, 2020 trade log, 2021 trade log, 2022 trade log, 2023. So I just trade. I track the trades. You know, some trades I'm in with stop losses, some trades I'm in with positions. You can see that some of these I'm stacking up a couple of orders. You know, this one, for example, Aussie CAD. I'm still building Aussie CAD. I'm still long Aussie CAD, and this one hasn't been closed. We're trading around 9,000. My goal on Aussie CAD is to build this up to around 9,100. And if we hit 9,100, I'll close this top one for a loss, take the other trades. This will add up to about 1,250 pips. So I'm still tracking a lot of these trades. If I have carryovers, I mark them here. I have carryover trades. Okay, so that's Forex. If I go into my equities on demand, here's my portfolio builder tracking all my trades. You know, I log all those. Here's my equities on demand. I have a Delta Trader, which is mostly options and short-term trading. We track all these. We're up like $30 for the year. I started this service back in late July. I mean, $30 net credit on a one contract, that's putting you up $3,000 just in profit for the last couple of months. That's pretty good. You know, Tracker, this has been almost a 3-year service that I've run for stocks and options. I track all of these trades. Right now, our batting average as far as wins and losses, we're winning about 64% of our trades and losing about 35, 36% of our trades. But our winners, typically when we take a credit spread or we take some type of option trade, we're looking for asymmetry on reward to risk. So if I have a dollar spread, I'm taking 60 cents. You know, if I'm winning 64% of my trades and taking a slight edge in reward than risk, it just helps me make more money. So this has been a good way to put together some nice wins. This has been, like I said, almost a 3-year service, and I track all of my trades. So I hope that's helpful. I mean, there's a lot of ways to do it. I also just take personal notes. Here's another one. Oops, let me go EOD. I know I typed it up differently. So here's EOD. So EOD, just my own personal notes on some of the funds that I'm trading, you know, owning some ETFs and doing some squeeze plays and other accounts that I'm managing between Interactive Brokers, TD Ameritrade, Charles Schwab, soon to be Thinkorswim. And so I just track all this stuff, all my trades, all my expirations, alphabetical order. If I need to find a stock, I just go look for it. So I know I had a bunch of trades on Alibaba. So there's, you know, all the expirations I can look for, and I just find out what account it is. And I can put in, you know, here if I own shares like I do on AT&T, let me go AT&T. Actually, let me do this. Break even. There should be a few of these. So if I go to CCL, I own some shares. Let me try to go down here to AT&T. So AT&T, there we go. AT&T. Let me see what account this is. Schwab. Okay. So I do have shares at AT&T. I should have a break even in here. Currently on 400 shares. Profit 15. All right. Close long. Credit spreads. Well, I guess I didn't track AT&T, but I do have one right here in Under Armour. So Under Armour, own shares break even $8, and I won't really get out of that trade until it's at probably $15 or $20. AT&T, I do own it, and I know it's like low teens. I'm trying to think here. I have some protection. I just sit on the shares. I got a couple credit spreads, the 16 by 15, the 17 by 16. Those are looking for some decent profit. And I'm just going to sit on that. It's a 5+% dividend. I've got 480 shares with dividends and reinvestments. And if it goes up to, you know, $22.50 to $25, let's see if I can flip that thing for $7 to $10 a share, and it'll be a nice cash injection. So anyway, this is not the fun stuff, right? This is real trading. So I mean, because I'm fortunate because when I run trading rooms and I'm tracking and I'm trading along with everybody else, I mean, I'll track all my trades. But if you're just trading by yourself, I mean, this might not be fun to do, but I promise you it is worth the effort of just keeping track of something. Take your trades, wins, losses. I mean, I do a really good job in some of these spreadsheets, especially, you know, close win, close loss, if it's filled, if I'm repairing the trade, what I'm doing with it. And look, I know this. I mean, we have 1,000 lines of trades here. I know there's a lot of stuff to track. But obviously, when we pass the expirations, I'm not worried about those any longer. But I keep tabs on it because I want to know, when I look back and see how many trades did I win versus lose, I can rack up, okay, we've logged, 1,000 trades or so, and we have a 64% win rate. Well, that's pretty good. I know that when we take a credit spread, we're trying to go after 50 cents on the dollar, 55 to 60 cents on the dollar. If we have a 250 spread, we try to get a $1.25 or $1.40, $1.50. So again, I have a slight edge in the reward versus the risk and a decent win percentage, which makes it pretty nice. So if you think about the numbers, I'll just do this really quickly before I let you go. Think about this. I'll just say I'll use 1,000 trades, and let's just say all my trades combined between Forex, stocks, options, everything. I'll say 1,000 trades. Okay, 1,000 trades. So let's say on average, I'm just going to round and say I'm winning 60% of my trades. Okay, which gives me 600 wins. Right, and let's say that with that win rate, I'm going to grab. Well, let's just say that it's always 1-to-1. It's typically not. I'm usually going for a slight surplus in reward to risk, but if I did a 1-to-1, okay, so I'd have a 40% loss rate, which would be 400 losses. And let's say that my average win, right? If my average win is $100 and my average loss is $100, we can do the math. So if I have 600 winners times $100, that's 60 grand, but then I'd have 40 grand in losses, I still make 20 grand in profit. That's fair, right? That's going at a 1-to-1 reward to risk. Now, if I have that where my $100, let's say I make $125, right? And my average loss is $100. Well, let's do the math on that. You can see that, okay, so if I was 1-to-1, I'm still making about 20 grand on these trades by just sticking to the process. If every time I win $125, now I'm up 75 minus 40. Oops. 75 minus 40. I'm up $35,000 by literally having just this tiny little edge in reward to risk. You make this slightly bigger, 150, the numbers just get ridiculous. So 600 wins at $150 on average, that's 90 minus 40. Now I'm up 50 grand. See what I'm saying? It's just a process. So can I do this? Yes. Am I going to guarantee that I'm going to win $1.50 for every dollar that I risk? No, which is why I'm just being conservative. All I'm doing is trading. If this is what I do and I win about 60% of my trades, but I make, a dollar for every dollar I make, I lose $1, but I win and I have a good win percentage, great. I still make money, right? But the nice thing is there are trades in Forex that give us higher reward than risk. There are trades in options that give us higher reward than risk. That's really what I focus on. If I'm going to risk, $5 for the week, I'm hoping I can make $10 for the week, right? Make it 100% gain on the week. If I can walk away with, $12, $15 for the week, even better. And then we own stocks, and I mean, inherently the stock market goes up. You have some sector rotation, you diversify a little bit. There's always asymmetry out there, and that's what I'm looking for, right? So let the winners run, ride some of these big trends. It's going to be crazy, right? There's no crystal ball. I can guarantee you that, I mean, there's a lot of randomness and irrationality out there, but I think, look, I've been doing this for a long time, and to me, it's just trading. I mean, and I don't want to dumb it down, and I don't want to make it seem like I'm just like apathetic to the whole process, because I love what I do. I love trading, and I want traders that I'm helping and traders that are following me. I want you to love it as well, because it is something that I care a lot about. I care about my personal accounts. I care about accounts that I manage, and the reason why is I'm good at what I do. But at this point, it is just placing a trade. I mean, I let the debits and credits add up. I let the profits and loss add up, and I see where everything stacks at the end of the day. And because I've been doing it for a long time and I'm confident in my strategies and just trying to find good trades, I think it's going to turn out okay. And I keep grinding. So that's really what it's about. Is there's no complacency in the market. I've changed strategies so many times. I've reworked and tweaked and modified so many times, and I will always do that. I will always be looking to give myself a better edge, give myself better data, and I'll start cleaning up my trades too. If I look at my notes and I see that, things I'm doing that are maybe were my biggest losses, maybe I got in too early, maybe I didn't hold trades long enough, maybe I didn't take positions that I should have, right? Maybe I over traded, maybe I spread myself too thin. All these things I'm going to try to streamline and improve. So that's my little bit of optimization. But what I'm not going to do is try to over optimize my strategies. If something works, I'm just going to keep doing it, making little refinements along the way. But I'm not trying to perfect it, right? You're trying to perfect an imperfect market. You're trying to perfect an irrational market. So you just trade. The nice thing is There's a lot of volume, a lot of liquidity. Every now and then you get some outliers, and I just try to position accordingly. So anyway, there's my public service announcement for the day. Hopefully that helps. If you have any questions on all this stuff, let me know. I'm really excited for 2024. It's been a year of some good profits for a lot of people, which is nice to have this recovery from 2022. But more importantly is I'm just trying to grind out some wins and position myself where if we have some broad market relief going into January, February, March of next year, before these rate cuts start, or until we have some type of thing that breaks the market and the Fed has to be reactive, perhaps that I'm positioned for some nice gains ahead. Because right now, like I said, you look at the U.S., all of the global growth has been because of the U.S., all of it. And so if China comes to the table, if Europe comes to the table, if anywhere except the U.S. comes to the table, guess what? Broader market has a chance to have some risk on. The U.S. market will stay pretty resilient for the most part. I think it'll still show some upside. We might drift and melt up higher. But I don't think that these big like 30, 40, 50% moves like we had this year for this giant recovery led by AI, led by hype, led by super value market, market cap led tech. I don't think it's going to be like that for 2024. So I'm still an active trader. I'm still positioning. I'm still trading volatility, and I'm still going after asymmetry. And take the notes, journal, do the boring stuff, but it's the important stuff. And I think that's what separates a lot of traders from winning and losing is be honest with yourself, track your notes honestly, don't fudge it, and just make sure that you're tracking. At the end of the day, look, if I'm working with anybody one-on-one, if I'm doing private workshops or group workshops, if I need you, want you to share this type of information, because if you're going to say it's all like emotional, like, well, I have some wins and losses, like that doesn't tell me anything. If you show me your account statement, profit and loss, I know what to work with, right? If I see massive losses compared to tiny wins, even if you had 90% winners, if you have a loss that wipes away all those profits, we need to fix that, right? So, I mean, the true assessment of performance, especially in trading, is are you making money? Because there's a lot of ways to do it. But if you're making money, there's a couple ways that happens. High win percentage or a high reward to risk ratio. That's it. Those are the traders that are the most successful, and those are the traders that stick to that process, refine and tweak their strategies to make them work, and then just find quality trades, quality over quantity. All right, I'll let you go for there. Thanks for watching. It's been about 30 minutes in the Trader's Path to 100%. This is episode 5, and happy trading lots of profits. I'll see you all very soon. Thanks, bye.